Guys, how's it going? It's Matt. I hope you guys are having a good day today and an even better day tomorrow. First, let's start off with a review of my plan going into this past week. Alright guys, so as you can see during week 15 of this challenge, I did not make any transactions, but boy, was it an interesting week. Overall this week, my portfolio was up in total. I was up about $350 or roughly 3.5%. When comparing that to the S&P was up about 1.5%. So again, finally, we are back to definitely a more comforting place where my portfolio is competitive with the S&P. And this week specifically, the past 5 days, it is performing about 2 times better than the S&P. So that is fantastic news. We are on our way back to being competitive and on a more even ground with the S&P. So it's looking really good for this portfolio for upcoming weeks. And to start off with a summary of the week, guys, the best performing holding I had this week was in Tattooed Chef, ticker symbol TTCF, which performed up 19.22% over the week, with TTCF being my second biggest holding in the portfolio. Obviously, this is fantastic news, as you might expect. Just from TTCF, I am up almost $260 this week. So this week was actually pretty insane for the portfolio, and my worst performing holding on the other side of things was my only holding that was actually down this week, as you can see here, that's marked in red. Interestingly, it also went down into the red only on Friday after the earnings report came out just after the session on Thursday. So as you may have guessed already, it's pretty clear to see that company is Peloton, ticker PTON, which was down 3.45% this week. And if I remember correctly, I believe just on Friday it was down between 7 and 9%. So clearly it was pretty significantly in the red. Or in the green, sorry. Just that earnings report really dropped it down for the rest of the week, and it's the only position in the red. So overall, fantastic week, and let's jump into the summary of total performance of the week. And with the summaries out of the way, guys, let's move on to week 16 of this challenge. Now that Peloton's earnings are out of the way, we are officially out of the portfolio's earnings season, where we had all of our positions except for Tesla and Teladoc report earnings in August. So that means a lot of the volatility of these holdings will be out of the way for the meantime, and we should be seeing people buying back into some of these holdings that were at least beaten down after under delivering on their earnings, such as Tattooed Chef. Tattooed Chef is a great example. That's up 18% since its earnings, which was just over a week ago now. And Peloton only reported its earnings one session ago, so it's definitely got some room for growth. So with that in mind, this week I am planning on shaving / closing 1 or 2 of my positions. Maybe it's a bit of a stretch closing 2 positions, but it's possible. Just to add to some of the other positions that are really looking juicy and undervalued. Since the account is still relatively small and flat fees exist in this account, however, I will be making some calculations to make sure I'm not hurting myself too significantly with the percentage of profits that are being cut by those flat fees. But in terms of overall performance, let's break this down. So the best performer is still in DraftKings, ticker DKNG. It is up 38.59% in the past 15 weeks. In terms of my worst performer, it's still with Skills, ticker SKLZ. I'm still not too worried about this position, as it is starting to climb back up, and in just over 6 sessions now, the share price has climbed over 7%, which is great news. It is starting to turn that corner. Hopefully it will continue on that trend. Overall, however, though, the position is down a total of 17.63%. And when comparing the portfolio performance to the S&P over the time period with dates included, my portfolio is performing 2/3 as well as the S&P, or roughly 65-66% of the S&P's performance. So my portfolio is up 4.35%. Although we are underperforming, is still a great sign, as we are really climbing back from being in the red only a few short weeks ago. Even I believe last week at some point, or sorry, the week before at some point we were in the red. And again, with the S&P trading at all-time highs and none of my holdings performing evenly with, or trading even within 20% of their 52-week highs, never mind some of their all-time highs, we really are in a pivotal position where some of these companies trading at low costs, and if I had more cash coming in, I would definitely be adding to these positions, as it's clearly people have traded them for higher with nothing really changing in terms of the actual companies themselves. So if people were willing to trade that at such high prices before, there's definitely reason to trade them again with future growth. It had been a rocky couple of weeks, as you have seen in previous videos, with some uncertainty, but even in a market correction, as long as these companies aren't completely destroyed economically, these investments will see major gains. And that's it for today, guys. I hope you guys enjoyed the video. Please let me know what you think in the comments down below. I'll be uploading updates every week, as always, summarizing the past week and pointing out some ideas going into upcoming week of this challenge to 500,000. Thanks again for watching, guys.